What happens when global tensions rise, world leaders clash, and oil markets begin to panic? Donald Trump is once again at the center of international controversy. New polls indicate that public approval of Trump's handling of Russia and Iran has dropped sharply. At the same time, crude oil prices are climbing, raising fears of another global energy crisis. But why are Americans losing confidence? How are Russia and Iran connected to rising oil prices? And could this become one of the biggest geopolitical challenges of Trump's presidency? Today, we break down the political tensions, the economic consequences, and what this could mean for the entire world.
Recent surveys suggest that many Americans are becoming increasingly concerned about Trump's foreign policy approach. His positions regarding Russia and Iran have generated intense debate both inside Washington and internationally. Critics argue that his strategies have created uncertainty at a time when the world is already dealing with multiple crises. Supporters, however, claim that Trump is attempting to reshape global power dynamics and protect American interests. But regardless of political opinion, one fact is becoming increasingly clear. Public confidence regarding these international issues appears to be weakening. Foreign policy approval ratings often influence financial markets because investors closely watch geopolitical stability. And right now, markets are seeing more risk than certainty.
Russia remains one of the world's most important energy producers. Any change in relations between Washington and Moscow immediately attracts global attention. Investors fear that increasing tensions could lead to additional sanctions, disruptions in energy exports, or unexpected political confrontations. Every time uncertainty rises, oil traders begin preparing for possible supply shortages. Even rumors of deteriorating relations can send prices upward. This is because energy markets are driven not only by actual supply disruptions, but also by expectations and fear. And fear has become a powerful force in today's market.
Iran represents another major concern. The Middle East remains one of the most strategically important regions for global energy supplies. Any escalation involving Iran can have enormous consequences for international shipping routes and oil exports. Analysts worry about the possibility of increased sanctions, military tensions, or disruptions near key maritime passages. Whenever geopolitical risks involving Iran intensify, oil markets react almost immediately. Traders begin pricing in the possibility that millions of barrels of oil could potentially be affected. Even if disruptions never actually occur, the fear itself can push prices significantly higher. And this appears to be exactly what investors are worried about today.
Oil prices are influenced by one simple principle: supply and demand. But geopolitical risk adds another important factor: uncertainty. When investors fear future supply problems, they begin purchasing oil contracts aggressively. This increases prices across global markets. Higher crude oil prices eventually affect almost everything: gasoline prices, transportation costs, manufacturing expenses, food prices, electricity costs. In other words, rising oil prices can eventually impact ordinary families around the world. A geopolitical crisis thousands of miles away can suddenly make everyday life more expensive. And that is why markets are watching developments involving Russia and Iran so closely. The timing could not be more sensitive. Many economies are still trying to control inflation and maintain stable growth. Higher energy prices could create new inflationary pressure. Central banks may be forced to reconsider interest rate policies. Businesses could face increasing operating costs. Consumers may begin spending less money. And financial markets generally dislike uncertainty. Stock markets often react negatively when geopolitical tensions combine with rising energy prices. Investors begin shifting towards safer assets while reducing exposure to riskier investments. This creates additional volatility throughout the global economy.
As approval ratings decline, political pressure inevitably increases. Foreign policy is often judged not only by diplomatic achievements, but also by economic consequences. If voters associate rising fuel prices with geopolitical instability, public dissatisfaction may continue to grow. Political opponents are likely to argue that Trump's international approach has contributed to uncertainty. Meanwhile, supporters may insist that strong policies are necessary despite short-term economic pain. This debate could become one of the defining political issues in the coming months. Because for many voters, foreign policy becomes personal when it starts affecting their wallets. And rising gasoline prices are something everyone notices. Several scenarios are possible. If tensions ease, oil prices could stabilize. If diplomatic negotiations improve relations, markets may regain confidence. However, if geopolitical risks continue increasing, energy prices could remain elevated or rise even further. Much will depend on future developments involving Russia, Iran, and broader international diplomacy. Investors, governments, and consumers are all waiting for signals regarding what comes next. Because the stakes are enormous. The global economy remains deeply connected. A crisis in one region can rapidly spread across financial markets worldwide.
Donald Trump's approval regarding Russia and Iran appears to be facing increasing challenges. At the same time, crude oil prices are moving higher, raising concerns about inflation and economic stability. Whether these trends continue will depend largely on future geopolitical developments. But one thing is certain. The world is entering another period of uncertainty. And whenever politics, energy, and global power collide, the consequences can be felt everywhere. From Washington to Moscow to Tehran, and ultimately at gas stations and grocery stores around the world. The coming months could determine not only the future of global energy markets, but also the political future of Donald Trump himself. Because in geopolitics, every decision carries consequences. And sometimes, those consequences are measured in dollars per barrel.